Welcome back to Financial Friends. Today we have another dividend journey update, and it is a bit late at night, so I hope that I'm not too out of it. But I do want to say thank you for joining me today. Make sure to like, comment, and subscribe. It greatly helps out the channel. I really do appreciate all the support I've been getting here on YouTube recently. It does not go unnoticed. So without further ado, it has been an absolute crazy busy week for me. So we have not gotten around to doing the things that we need to do. So I want to touch on a few points. One, how I keep up with how I'm diversified within the portfolio. Two, the next stock that we should be adding to the portfolio. And three, why we have not added it yet, as well as just a small little sort of view or picture of how we've grown already. So let's go ahead and just get started here in the portfolio. We're going to go and shrink everything down. So as you can see, a little bit of a sneak peek. Well, let's hop into the portfolio here. So everything is still the same. We have not added any new positions quite yet. Why? Why have we not added any new positions? Well, the reason we haven't added any new positions is because of how busy I've been, and because I have not gotten a chance to do the proper research. So we are going to be looking at adding Microsoft to the portfolio. That is what I think at the moment could be our best bet, but I have not pulled the trigger on doing that quite yet because I haven't had a chance to do a deep dive on the company. I have some, financials and some other things I want to look at, and obviously it's the holidays, and I have not gotten around. So we can use the dividend tracker here to just kind of get a broad picture. Now there are some translation errors and some, things that aren't quite up to date, but this does give us a pretty good picture. So we can look simply at dividend growth, and obviously as we can see back from 2012 up until 2021, that dividend has grown. That's what we like to see. We also like to see revenue growth over time, which clearly that has gone up as well. We also like to see a good current ratio, which as you can see here, the current ratio is a liquidity ratio that measures the company's ability to pay short-term obligations or short-term debt, and it can tell investors and analysts how a company can maximize the current assets that they do have on their balance sheet to satisfy the other debt. So essentially, how much cash do you have right now that you could pay off any obligations or debt or anything that you need to pay off? So that is one that I really do like to look at. Another one you could take a look at, is forward PE ratio or a few other things. But again, we don't really need to take too big of a look at that quite yet because we haven't dove into everything. We can see back here, obviously they've been continuing to raise their dividends, from 42 cents to 46 cents to 51 cents, all the way up now to around 62 cents a quarter, which is fantastic. We can even use their detailed breakdown here, which I think this stat looks like it's a bit off. But again, I haven't done my full-blown research, but it grades out fantastic everywhere else. And even with the 0 out of 100, it has a dividend score of 83. So we're looking at adding Microsoft. We haven't pulled the trigger yet. Now, why are we adding Microsoft, and how do we check the diversification of our portfolio? Let's go ahead and do that. So I had a question in the comments of how do I, get that broad picture of my portfolio, and this is how I do it. I can use the diversification tool here on the dividend tracker to kind of check that out. So one thing you can do is break it down by holding. So as you can see, we have Apple, SCHD, FizRocks, 3M, J&J, Waste Management, and O. And you can get like the percentage per, a holding basically in your portfolio. But sector diversification is kind of what I like to look at. So MISC for us is going to be the ETFs. We have a large portion of ETFs. I remember wanting to keep it about 50%. We're currently at 38.32%. So we're not quite there, but we're close. And I did know that over time we were going to want to add some individual positions, which was going to pull away from that. So we're okay there. Next is going to be industrials. We also have healthcare, real estate, and then information technology is pretty much our smallest portion of the portfolio. And that's one that I think over the long term for us as we continue to grow our portfolio into the future is going to be a good growth position. Obviously, this is a dividend portfolio, but we are going to be looking at long-term growth as well. And I think companies like, Apple and Microsoft, although they're massive now, over time, they might still contribute to that growth as technology becomes a larger part, of our civilization as a whole. So I think those could be, or Microsoft in specific, could be a great play, as well as a little bit more diversification kind of in that technology area. You could also break it down by industry as well. But I think another thing that's really useful is kind of, for me at least, I'm very visual in this sense of what's the actual percentage of each company, see the picture of it. And so you can see that Apple down here is our smallest holding. Realty Income Corp is definitely something that I want to get up and maybe get some diversification in that real estate area as well. But as I said, things have been busy. So kind of pulling out of everything here, why have those triggers not been pulled on adding those positions? Doing the research is very, very important. I want to stress that, it's not just a light decision to add something to the portfolio. And it might seem like that through the screen, but really there's some due diligence and some research that has to go behind adding each position. Each company in the portfolio has been looked at by me, and I've decided that long term it's going to be a good investment. And that's why I don't have any type of stress in these markets. As you can see, markets are red. I don't have any stress because I know that these positions are solid, staple companies that I'm going to have no issue investing in, whether they're green, whether they're red, whether they're upside down, right side up, left, right, you name it. I feel comfortable because I understand the business, I understand the company, and I know why I'm investing. And again, that's another thing to kind of touch on is, do you understand the company? Not only from a financial standpoint, but just a simple, how do they make money? What is their product? What do they do? What do they sell? And how could that be taken away? How could they lose money? A company like Microsoft, I kind of have that basic knowledge, right? You're aware of their cloud services. You're aware of their products that they sell, the Surface tablets, some other things like that. How they have their Microsoft suite, they have the Teams platform, etc., etc. But then also, how can that get taken away from them? Why would people potentially not be purchasing tablets? Why would their cloud software be taken away? Why would companies decide to go elsewhere? There's other questions you can ask, like, would big organizations stop using the Microsoft suite? Is Skype not something that people like? Is Microsoft Teams not a platform that people like anymore? So you can kind of look at all of that, and I tend to side more with that than actually the financials of a company. So numbers on the screen are one thing, but real world, how is the business going to function? How are they going to make money? And how are they going to lose money? So that's kind of some things I haven't really had a great time to think about yet with Microsoft and maybe with a few other tech companies. So I have not pulled the trigger, and again, that's very, very important. All right, so shrinking myself back down, the last thing that I wanted to touch on was the dividends. How much are we making in dividends? So our December income, as you can see here, is going to be $1.17 total, with our annual income at $5.68. And this might look very insignificant overall. $5.68. But we started at, back in October, $1.01. Our very first purchase of stocks, $50, yielded us $1.01, and now we're all the way up to $5.68. And for me, that is just crazy. I mean, it's only been a couple of months. We've been investing consistently. We've had a few times where we've been able to chunk away and add a large portion, but we've already grown it to that. So to anyone who's looking to start a dividend portfolio or just get into, investing in general, go for it, right? There's never going to be a perfect time unless you hit the very bottom of the market and you just so happen to get in. But hey, go ahead, get started. Start small if you're hesitant. Work your way up. Again, it's not financial advice, but I do think that getting started is going to pique your interest. You're going to be able to learn about things like this, see these actual dividends coming in. And if you're picking these, recession proof or these like stable companies who aren't going anywhere, whose businesses continue to do well in poor economic times, good markets, bad markets, whatever it might be, then you might set yourself up for some dividend success. So with that being said, this video has been all over the place, but there was just a couple of things I wanted to get off my mind. These are things that I think about as an investor. It's not always sunshine and rainbows. It's not always straightforward. It's not always easy with a new stock every week. There are times when things don't get added. There are times when you're just doing research. There are times when you're taking a look at the past or you're reevaluating what you're doing now. So I just wanted to put all of that out there. I think that anyone can benefit, from hearing these things of what actually goes through your mind when you're not adding positions, all of the sorts. So if you were able to gain just something out of this video, hopefully there was something that you were able to listen to and maybe be able to add to your own strategy, go ahead and give this video a like. If you hated the video, give it a dislike. If you have something to say, drop a comment below. And if you are not already subscribed to see the video that's coming out on Thursday of this week, definitely go ahead and do so. Then after that, just click the little bell right beside it. That way you get notified when that video comes out. And I hope you all have a fantastic day.